Yeah, there is clearly a tug of war between two different factors. One, as you mentioned, being the liquidity that is being pumped in the market, and also the hope that a vaccine is on its way at some point. And clearly, those two things are positive catalysts and support for the market. And on the other side of the equation, you do have this risk of a second wave or first wave. It's difficult to say, but clearly there is a risk of new infection and more targeted lockdown, like the one you just mentioned around Spain, for example. And an economy, a global economy, really that is not doing amazingly well. Yes, you can see short-term indicator pointing to a rebound, but that's fairly normal when you have had an economy that has been completely shut down. So those two forces are basically opposing themselves. We feel that the trend might be to grind slightly higher just because equities tend to go higher over time. But it will be difficult to have, in our opinion, at least huge upside in the short term, just on fundamental alone. You would really need to see a vaccine for the upside potential to become more attractive, in our opinion.
Julien, in terms of where our viewers, who, and let's face it, according to the papers this weekend, everyone's sitting on big fat cash piles at the moment. And of course, Rishi Sunak wants us all to go out and spend it in the UK. Governments left, right and centre are desperate for us to go out and spend it. I personally have more scepticism about the benefits of that for my personal household. But the fact of the matter is, if they're going to spend it in the market, where should they spend it?
Well, for people looking to invest right now, clearly, from an asset class perspective, first, we do believe that equities are still the place to be in a context of a very low interest rate, in a context of an economy that gradually, especially if you invest and not just trading, over the medium term should recover. So we would prefer equities. And within that, we maintain a preference for US equities and emerging market equities over Europe, which to us remains very much a trading kind of region rather than one where you want to buy the index for the very long term. There's plenty of opportunity at the stock level in Europe, in our opinion, but from, I would say, geographical exposure and at the index level, we prefer US and emerging market, China in particular.
What about the valuations of the US as well? I'm tearing out what hair I've got left sometimes at people looking at the US and actually making it a metaphor for the NASDAQ or vice versa. There is a whole host of companies out there, a whole host of sectors, which are stunningly underwhelming in terms of their performance as well. Should we be looking at those, or do you fancy herding with the ones who like tech?
So we do like tech, we do like healthcare. Granted, these are, I would argue, consensus long at this point, but they're also the only sector that really provide you with this medium-term visibility and growth potential. There are definitely opportunities across the board, and that's why we think it's important not just to think about growth versus value or those kind of calls that have been made in the past, but rather to look at the entire spectrum. And the factor that we would really focus on is more the quality of the company, whether it falls in the value bucket or the growth bucket. Do this company have a strong balance sheet? Is strong enough to withstand this difficult period, because it will be a difficult period. So we would stick with tech, with healthcare, because that's where you find the highest quality company at the sector level. But we would really be looking across the board, not necessarily chasing the names that have been beaten down, just because, again, as an investment over the medium term, we don't necessarily think that's a great strategy. So that's how we would be looking at it.